But now, let's just say in 2029 or 2030, our next bull run concludes. So let's say 3 years from now or so, guess where your target is? Right up here. In 2030, what's your target? 10,000. Right there, guys. See that? Okay. Now, anywhere, depending on how, so basically the idea is we come back to about 3,500, right? And that's that level in there. Then, who knows how it goes, but there you go. 10,000.
Could do, I think, one of two things. I think we are going to either see a sharper pullback all the way down to this zone. It'll become a prime opportunity for long-term investors for both gold and silver, or we are going to see this giant bullish pattern here.
Gold is flashing a warning right now, and most investors are completely missing it. While everyone is calling for higher prices, the charts are quietly signaling something very different. A major pullback before the next explosive rally. And here's the shocking part. This reset could be the final opportunity to buy gold and silver cheap, before a potential move to $10,000 gold. Let's break it down.
Okay, so you see how the chart is guiding us, right? And so now we still held the 4,400, but we still made a lower low. That tells me in the near term that, again, while we could bounce up a little bit more, we could easily get as high as 4,800, maybe 5,000 again. We're likely going to head lower on gold and continue down. Ultimately, you guys know my bigger long-term or midterm, I should say, thesis, which is an eventual move down to about this 3,500 level. Look at all this major support here. Now, I've told you before, this is where I start buying pretty aggressively. Okay, now I'll swing trade gold all up in this range. Anywhere up here, I might go long, I might go short, depending on the short-term signals on the micro chart. But on the longer term, this is where I want to buy because my longer-term thesis remains exceptionally bullish, right? And again, why am I bullish long-term? Well, near-term, I'm bearish because, number one, gold is acting like a risk asset, and it's not a risk asset. At least it hasn't been for hundreds of years, if not thousands of years, right? And so all of a sudden we can't say, oh, well, in the last 6 months, gold all of a sudden has become a risk asset. So yay, it's going to be a risk asset for the next 500 years. No, it's not going to be like that. And so when it becomes a risk asset, it tells you there's too much speculative money in there, and that has to be washed out. Therefore, with the bearish lower lows and lower highs, we favor the chart saying downside, and the thought process of it needs to wipe out the weak hands has to come into play as well. So that brings us into that 3,500 level. The reason why I'm bullish longer term on gold is because you have consistent higher debt in the U.S. and globally of fiat currencies, right? The degradation of fiat currencies, the U.S. dollar, etc. Every lesson that got people excited about gold over the last couple of years, that's a true factor. That's a true thesis. And I believe in that thesis. It's just you got to wipe out the weak hands first. You got to get them to kind of say, uh-oh, this wasn't as easy as I thought. And they get out, and then it returns to that kind of longer-term thesis of the anti-fiat kind of protection, risk off and better. All right, now, right now, we're talking about how I was able to talk about the top. Then we'll go into projections. So here, look at this as well, okay? You basically have this low connected right through that high, cuts right here. You had the blow off top reversal right here, and we get up right here. So this really, again, did I know exactly where gold was going to top? Was it going to be 5,600 Pierce? You could have gone a little higher, but the point is, look at how close those lines were. Major logarithmic trend lines connecting through here. And that, again, was telling us that while everyone was emotionally triggered to think that gold was going to go up forever and it was going to go to 10,000 in a year, whatever, it was the chart was saying, no, 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 no. It's not that easy. And also, it became a speculative asset, and that's never a good thing for gold. All right, now, let's talk about upside potential. So using that same format, what if we, again, let's talk about parallels. So number one, we connect this low here, right? And that was kind of what we had done already, right? So that gives us that first top. But what if we connect this low through these lows and we use that same sort of format? So look at how these align perfectly on the logarithmic chart, okay? So here's a trend line. We take the low from 2001, basically 25 years ago. We connect it, and look at how on the logarithmic chart, it matches perfectly with the low of 2018, the low here in 2022, and the low in 2023. Now, what if we extend that parallel up? Well, first of all, look at this. So, I mean, this is, by the way, this is the stuff that freaking excites me so ridiculously. But look at this here. Look at right here. So what you're doing is you're looking to see, does the logarithmic and the new trend line have teeth? In other words, does it make sense? And look at that. Look at how it behaves as support, 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 and support, then resistance, 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 breakout. Now, what did I just tell you guys about my downside target in the near term on gold? Where did I say it was going to, my thesis is going to go? And you should all know 3,500, right? I mean, no hiding there. All right. So if we look at this, we can see, where is this trend line? If it were to retrace right there, look at that. What's that at? 3,500 right there. So that, number one, means that not only is that major technical support from here, but it also has a secondary factor there. Now, let's use this and extrapolate out. What if in the next bull cycle, we go up to this high here? Okay, so the bull market high on the logarithmic chart from 2011. By the way, I'm not going to have time to do silver today. Taking, too many. This is too much to go into, but that's okay. I'll do silver individually, just like this, in another video. But now, let's just say in 2029 or 2030, our next bull run concludes. So let's say 3 years from now or so. Guess where your target is? Right up here. In 2030, what's your target? 10,000. Right there, guys. See that? Okay. Now, anywhere, depending on how, so basically the idea is we come back to about 3,500, right? And that's that level in there. Then, who knows how it goes, but there you go. 10,000.
According to technical analyst Gareth Soloway, gold may be setting up for a classic cycle. Short-term pain before long-term gains. Right now, gold still looks strong on the surface, holding key levels, but underneath, the structure is weakening. We're seeing lower lows, which is often the first signal that momentum is fading. Yes, gold could bounce from here. A move toward $4,800 to $5,000 is still possible. But zoom out, and the bigger trend is pointing lower. Why? Because multiple technical signals are converging around one key level. Backhand index pointing right, $3,500. This isn't just a random number. It's where major trend lines, historical support, and breakout zones all align, creating a powerful confluence zone. And that's exactly where smart money is waiting. Now here's the bigger picture. This isn't the end of the bull market. It's a reset. Gold has recently started behaving like a risk asset, moving with stocks instead of acting as a safe haven. That tells us one thing. Backhand index pointing right, there's too much speculative money in the market. And that speculation needs to be flushed out. So what happens next? There are two possible scenarios. Scenario 1. Gold drops sharply toward $3,500, shaking out weak hands. This becomes a prime long-term buying opportunity. Scenario 2. Gold and silver move sideways, forming a massive bullish base before the next breakout. Either way, the short term is uncertain, but the long-term story remains incredibly bullish. Why? Because nothing has changed fundamentally. Global debt keeps rising, fiat currencies keep losing value, and gold remains the ultimate hedge against both. In fact, if this cycle plays out like previous ones, the next major bull run could push gold toward $10,000 by 2029 to 2030. But here's the key. Before that happens, the market likely needs to reset first.
We're going to do at this point. We have been seeing precious metals over the past couple of weeks sell off with stocks and rally with stocks. Now, previously, before we got into this huge reset in the metals pricing back in January, gold and silver were acting as defensive plays. They would move up when there was uncertainty and fear, and we continued to see that happen. But now investors have been shaken up, and now there's so much emotions that the price of metals are really just moving with the same sentiment and the same FOMO and panic selling as the stock market. And so right now it is really trying to digest. Investors are trying to digest, get used to what's going on in the metal space. But if we do see the markets break down, the equities markets, we're probably going to see the US dollar rally, which means we'll probably see gold sell off. And the dollar is a very powerful tool here. If we take a look at the dollar and zoom out, you can see the dollar has been testing this 100 mark on the chart right here. this is a very significant resistance area. And if it does break out, that probably means we've got more chaos. We've got stocks collapsing and getting rejected at resistance. And of course, if the dollar goes up, it's going to hurt the metals market. Again, if we look at the SPY, everything is pretty much on the verge of having a big reversal. So we've got stocks right up into resistance. Either we're going to see some type of good news in the Middle East, some type of relief, and we're going to see a relief bounce, a follow-through move in this bounce, or we are going to see stocks quickly get rejected, make lower lows, the dollar breaks out, we see a lot of things crash and sell off. So those are kind of the big plays. If we go and look over at the silver space, we have been seeing silver. We saw this huge euphoric move to the upside. If we zoom back on the charts, let's just go way back here. Obviously, this is a point here where investors became a feeding frenzy. More or less, everybody piled in. They chased and drove the markets higher. And usually, once we get into that, we tend to see usually 50% or 100% of these FOMO-driven moves, these euphoric pricing bubbles, more or less, get repriced back to wipe out the people who are chasing price. Now, if we were to look at the price chart of this using Fibonacci extensions, the downside target is actually $39 for silver. And while some people don't want to see that, in reality, I think it's actually a very good thing because it gives us an opportunity to repurchase metals. Now, we did close our silver trade out at 113. We closed gold out at above 100. And we are waiting for this full reset in the metals market. And what happens is this measured move actually brings us down to pretty much everybody who chased the pricing higher and paid a premium will probably get shaken out and wiped out, and we can re-enter at a very good discount for what I think will be a very big move in the long run, where silver goes dramatically to all-time highs, gold will as well. But I think there carries a lot of risk in the precious metal space right now. Gold is pretty much the same. If we were to just look at the chart of gold, we've already hit one of the key measured moves with this. We've already sold off. We got this bounce. We came down and hit the 100% measured move. But when we look at gold on a shorter term basis and zoom into the more recent sell-off, which is this here down to this low and this bounce that we've had, it is pointing to about $3,500. And if we zoom back on the charts, we can see that this level, this measured move based on technical analysis, is the breakout point where gold also took off into this feeding frenzy where everybody chased and drove the markets higher. And so again, gold could wipe out and come all the way back down to these levels and give us a amazing opportunity to get back into this space again, getting rid of a lot of this risk. I think still holding up here carries a lot of risk. So that is kind of what ideally I would like to see. This is also what the charts are pointing to. Gold and silver could do, I think, one of two things. I think we are going to either see a sharper pullback all the way down to this zone. It'll become a prime opportunity for long-term investors for both gold and silver, or we are going to see this giant bullish pattern here. We're going to see gold and silver build this launch pad, a giant bull flag, and eventually start a next huge run to the upside, at which point, when it starts to break out and starts to run, there will be some levels in here that we can catch and re-enter and catch the next move and catch one of these big rallies to the upside. So it doesn't matter what gold and silver do. Right now, we're on the sidelines waiting to see which way it wants to go. Are we going to get a better opportunity to rebuy it, or can we just buy it later as it starts a new run? One of the concerns is we see gold and silver trade sideways for an extended period of time, potentially a year or two.
So right now, it's not about chasing the hype. It's about waiting for the opportunity. Because whether gold drops to $3,500 or builds a base, the next move could be massive. If you want to stay ahead of these shifts in gold and silver, make sure to subscribe, hit the like button, and stay tuned. Because the biggest moves happen when nobody's paying attention.